Business News, we're news for business people.
Good morning. You're watching Daybreak on Bloomberg Quint Live, India's first digital live streaming business news service. I am Agam Akil, and here are the headlines. Asian markets start December on a positive note after the US stocks close at a new record. And Brent crude prices remain above the $62 per barrel mark after the OPEC members agree to extend production cuts till the end of the next year. And India's economy grew at 6.3% in July to September, indicating a recovery after 5 straight quarters of decline. And automakers are expected to register double-digit growth in their November sales, aided by a low base last year. In the US, stocks rallied on Thursday as the possibility of the Senate passing a bill aimed at overhauling the US tax code increased, and the Dow and the S&P both hit all-time highs. And Bloomberg's Abigail Doolittle is here to wrap all the action on Wall Street.
Stocks rallied in Thursday's Wall Street session. The Dow, S&P 500, and the Nasdaq all finished solidly higher. The Dow leading the way, finishing up more than 1%, having its best day since September, off of the highs. In fact, at the highs, the Dow was up 1.6%, adding 384 points, on pace for the best day of the year, but nonetheless moderating those gains, but still a big day, a 5th day higher for the Dow, the best 5 days for the Dow of the year, and yet another record high as the Dow crossed above 24,000. So lots of bullish activity. The S&P 500 also put in a record high, and the Nasdaq, the tech-heavy Nasdaq, which sold off pretty hard on Wednesday, rebounded to some degree in Thursday's Wall Street session. Now, relative to some of the best sectors, the industrials did very well, as did energy. Another top sector, the banks, financials, that was a very strong sector, being helped by hopes around tax reform, plus yields rising. JP Morgan, Citigroup, along with Goldman Sachs, all rose. Goldman really the big winner there, up 2.6%. Tech was another strong sector. Overall, up about 0.9%. We saw a nice rebound rally for the likes of Apple, Facebook, Microsoft, and Intel, all of those big tech names up more than 1%. And of course, Bitcoin, that remains a big story. Bitcoin was down about 6%, well off the record peak, as some investors are still wondering whether it's a bubble, it's too late to buy. Time will tell, but on this particular session, Bitcoin did fall a little bit and was certainly below that 10,000 mark. And then finally, taking a look at the havens, lots of the havens lower, including bonds, the yen, and gold, telling us that Thursday's Wall Street session, with those record highs for the Dow and the S&P 500, was truly risk-on. In New York, Abigail Doolittle, Bloomberg News.
Okay, so moving on to the Asian markets, again, muted cues, absolutely flat opening when it comes to the Japanese indices such as Nikkei. There you have it, very little in terms of movement. So it's currently standing at around 22,717, not too much to speak for. But are we expecting the same in Indian markets here? Well, Neeraj Shah is here to give us an update on what went down yesterday and what we can expect in today's day of trade. Good morning, Neeraj.
Good morning, Agam. Well, I'm sure you will give us a detail of how the F&O picture is looking like as well and how the expiry was. You could probably argue that the fisc numbers, added with that, the volatility on expiry day, led to what happened in trade yesterday. But we're not taking any cues from the US markets. Actually, for that matter, the Asian markets are not picking up any cues from the US markets as well. So while those markets did very well, established or broke some new records, we don't see the effect coming into our markets as well. It's the first day of the new series. Typically, after a really strong down day, anecdotal evidence does suggest that there could be stability or even a bit of an uptick going into the first day of the new series. Let's wait and watch if indeed that happens or no in today's session. I think the market would be probably a bit happy with the GDP numbers that have come out as well, but you would reckon that that was priced in because the murmur numbers of a much better than estimated GDP was already floating around the previous 2 or 3 days. So maybe this will not be too much of a market moving event. I think all eyes out will be on the auto sales numbers and how they come out. Expect a fairly robust month. The Bloomberg Quint survey that we gave out yesterday anyways pointed to the same as well. So I think that is something that we're watching out for. But I would really be keen, Agam, to hear from you as to how the derivative setup is looking like in the new series after what's been a fairly interesting the last couple of months.
Absolutely. When it comes to this particular series, we have seen the November series end with marginal losses, but that is typical of a very long series, and November series was a long one. It was a 5-week one. So in terms of what's transpired in the December futures, we've seen naturally an increase in open interest, this time around 49%. Of course, rollovers were largely in line with the previous 3-month average, so we'll be watching out for what that means in terms of trades for December futures. When it comes to the Nifty Bank as well, good 82% added, so a bigger surge as far as open interest there is concerned. I wouldn't read too much into the fact that the indices fell and whether or not that would be towards longs or the short, because of course this is an expiry and we saw a lot of rollovers coming through. But the VIX did move up by as much as 3.8%. Currently standing at around 13.5. Nothing really has changed considering it is still moving within the range of 13 and 14. But the put-call ratio has moved up substantially to around 1.32 as against 1.27. And in terms of the big changes in open interest, there you have it. Just one strike looking at substantial movement in terms of options. So it is that particular call and put which is looking at, well, substantial unwinding. But moving in terms of some stocks that I'll be watching out for, we have Apollo Hospitals, which has seen fresh longs building in. I know the underlying has seen a very little change, but it has seen a lot of accumulation across series, and that's the same for Jet Airways as well. No stocks in the F&O band, but SREI Infra may see a little more weakness considering the fact that the stock moved down substantially by as much as 6.4%, with open interest also adding considerably across all series. So we'll be watching out for some of those stocks going into today's trade. But as Neeraj mentioned, it is about the GDP, and the Indian economy bounced back after 5 straight quarters of decline in growth, suggesting that the impact of twin shocks, demonetization and the goods and services tax has started to fade. GDP recovered to 6.3% after falling to 5.7% in the previous quarter, and the economy grew at 6.1% in the gross value added terms in the second quarter. And well, that's as far as the GDP is concerned. But Finance Minister Arun Jaitley says that the impact of GST and demonetization has faded, and he adds that manufacturing growth has added the bounce back in the GDP this quarter.
If you at all compared this to any previous figure immediately preceding there, this looks entirely different. But then I think the fact that it marks a reversal, it's been enabled essentially by manufacturing, and that investment has moved up, I think, with something which was extremely challenging so far.
Meanwhile, Chief Statistician TCA Anand says that the Q2 GDP could be revised higher after accounting for higher tax collection figures. Listen in.
As a consequence, it is likely that when the revised estimates are prepared, indirect tax collections for this period may actually be higher than what we have reported. So that's something which you may wish to keep in mind when you are interpreting these numbers.
So the Indian economy may be finally getting past the demonetization and GST hurdles. Growth bounced back to in the second quarter after 5 straight quarters of decline. But the recovery is slow. Ira Dugal has this report.
The Indian economy is on a recovery path, but going by the second quarter national income numbers, it looks like it's going to be a very slow recovery path. So you've got the gross value added numbers, and growth in gross value added terms has come in at 6.1%. That's a touch lower than the consensus, or actually the median expectation, which was at about 6.2. It is slightly on the disappointing side, although directionally, as economists said, it is moving in the right direction. GDP growth came in at 6.3. So in both those numbers, you've seen a pickup compared to the first quarter of the year. So perhaps you could say that the economy has started to recover from those bottoms. But if you look at the sectoral numbers, there's some slightly confusing trends that are getting thrown up Firstly, agricultural growth slipped to 1.7% from 2.3% in the first quarter. That was a little bit of a negative surprise. But on the flip side, manufacturing was very strong at 7% growth in manufacturing compared to 1.2% in the last quarter. You've got a nice uptick coming in there. It's difficult to say whether this will last and at what point some of the informal sector troubles will start to reflect. Construction growth was weak, 2.6% compared to 2% last quarter. So the sort of flux in the construction industry for a number of reasons, whether it was demonetization or RERA, that seems to be continuing. Financial services was also disappointing with growth of just about 5.7%. If you look at the expenditure trends, again, there are the positives and the negatives. So gross fixed capital formation, which is an indicator of private investment, grew at 4.7%. That's the best in about 5 quarters, economists are telling us. So that's certainly healthy. But if you look at it in terms of contribution to GDP, that remains below the 30% mark. In fact, came down further in the second quarter to about 28.9%. So depending on how you want to look at the fixed capital formation number, it could be seen as a positive, but also not all that positive. Private consumption growth was at 6.5%, lowest in 8 quarters. That's a little tough to understand where that's coming in from. Praveen Chakravarti, who's a consulting editor with Bloomberg Quint, an economist with IDFC Institute, said it could be linked to agriculture and the weakness in real incomes there. Export growth remains static and quite weak at just a little touch above 1%, so that remains a problem point as well. The other pressure point, which is now clearly emerging, is government finances and the impact that is having on growth. So if you look at 2 numbers, one coming from the expenditure side, another from the sectoral side, government consumption grew at just 4.1% in the second quarter compared to over 17% in the first quarter. That's showing significant slowing from the government end. And again, public administration, which is a segment which gets computed along with the sectoral numbers, that grew at just 6% compared to 9.5% in the first quarter. Both those numbers from both sides, expenditure and otherwise, are telling you that government finances are strained, and that could have a bearing on how GDP growth plays out from here on as well.
And Bloomberg Quint's contributing editor Praveen Chakravarti takes a look at the GVA trend for the agriculture and manufacturing sectors before and after demonetization to check if growth is coming back. Listen in.
The big question around India's economy right now is to find out if it has recovered to its pre-demonetization levels and shaken off the impacts of demonetization. To find out, I use a 3-sector GVA indicator of agriculture, manufacturing, and construction. These 3 sectors account for almost all employment in the country and are perhaps being the most affected by demonetization. So before demonetization, these 3 sectors grew roughly at about 8% in nominal terms and about 6% in real terms. After demonetization, there was a clear impact where the growth in these 3 sectors declined to as low as 1.5%. Surely this quarter, it has seen a bounce back. So the trends in the recovery of these 3 sectors is right. But the levels are still below where they were before demonetization. Hence, the trends are right, the levels are perhaps not yet there.
And staying with macro data, the country's fiscal deficit for April to October has reached 96% of the budgeted estimate, and the deficit stood at 5.25 lakh crore according to the official data. The government had set a target of 5.47 lakh crore rupees for FY18, and during the same period last year, the GDP was at 79.3% of the full year target. The government hopes to contain the fiscal deficit at 3.2% of GDP for FY18. But moving on, OPEC and its allies have agreed to extend oil production cuts until the end of next year as they battle to support prices. And the decision was announced after a day of talks in Vienna. Bloomberg's Yusuf Gamal Eldin brings us this full report.
As the meetings draw to a close here in Vienna, OPEC then in a position to extend the agreement with non-OPEC for those production cuts for 2018. You're looking now at January 1st all the way to December 31st, 2018. Analysts had expected a 9-month extension. Some fresh color in this deal. You've got Libya and Nigeria. They're going to be asked to be part of the agreement, not with actual cuts or curbs, but with pledges. So pledges not to increase production beyond current levels. That's 2.8 million barrels barrels per day worth. The group's also going to meet over the summer to review the progress and, well, what they call recalibrate according to market realities. And what we didn't hear, though, in all of these discussions was any news about how this deal will be wound down once they feel that the inventories have come back to an acceptable level, which so far has been the 5-year average. Yusuf Gameluddin, Bloomberg News, Vienna.
And following the announcement of Saudi Arabia's Energy Minister Khalid Al-Falih said they expect 2018 to play out on lines of 2017.
2018 will very much mirror what we have done in 2017, and we've seen an increasing level of compliance from both the non-OPEC and OPEC countries. I think the numbers of October are very encouraging, and we expect November to reflect this as well.
Moving on, let's take a check on the rupee and the bond markets. Of course, today is a day where rupee will not trade, but Saloni Dhanuka joins us on the show to give us an update. Saloni, good morning.
Good morning, Agam. So currency and debt markets is to remain closed today for a local holiday. Now, talking about how will the rupee react on Monday when it opens after the GDP data, how will it react? So analysts are expecting the rupee to open flat to negative. Though the GDP data didn't disappoint, the local currency markets will be taking cues from overseas market, that is especially from the dollar, which has been quite volatile of late. Now, talking about how rupee fared yesterday, it snapped its 3-day winning streak and it ended 0.2% lower at 64.46 levels against the dollar after local equity markets fell sharply ahead of the GDP data. Now, while higher crude oil prices as well as rising US Treasury yields largely pressurized the rupee. Now, mind you, rupee posted its second monthly gains as it appreciated by 0.8% in October, and it was up 0.4% last month. Now, on the global front, dollar index trades lower for the third consecutive session. It is down 0.1% in the early Asian trade, and it is hovering around 92.90 levels, while pound continued its rally against the greenback, and it rose as much as 1% yesterday to hit a 1-month high on the back of positive commentary by the government on Brexit developments. Moving on to bond market, the 10-year benchmark yield ended 3 basis points higher at 7.06%, and mind you, it rose 20 basis points last month. And lastly, global funds reduced their rupee debt holdings yesterday. They reduced their debt portfolio by approximately 200 crores according to NSDL data.
Well, thanks for that, Saloni. But going from one currency to potentially another currency, Goldman Sachs' Lloyd Blankfein says that it's too early for his bank to drop a Bitcoin strategy and that he doesn't consider the digital currency to be a store of value. Let's hear him out.
I'd say life must be really, really rosy if this is what we're talking about. It just feels...
This is what Wall Street's talking. Okay, so I was talking to Jeff Curry over at Goldman the other day, and he said the only thing that people are asking him are Bitcoin and EVs. So you're a huge investment bank.
Life must be really rosy if this is. Yes, I'm thinking about it because I get asked about it. I said, look, where I am is it's not for me. But there's a lot of things that weren't for me in the past that worked out very well. If you told me that if it was 20 years forward and it worked out, I could tell you why it worked out. But based on everything I know, I'm not guessing that it will work out. But I can say, I'm not going to stand there and be strident and say it's a fraud. It can't, because it might.
Brokerages seem to share the auto dealers' optimism around auto sales in November. And a poll conducted by Bloomberg Quint among 3 brokerage firms show that they expect monthly sales to rise in double digits. And last month, Yash Upadhyay is standing by with the details. Yash, our dealers' check also suggested a similar rise in sales.
Well, so November auto sales are likely to be strong across the board. This is mainly got to do with a lower base after Prime Minister Narendra Modi announced demonetization in the first week of November 2016, which significantly dented auto sales. Taking a look at the individual players, Maruti Suzuki sales are likely to come in 15% higher, led by that lower base effect playing on, also with strong demand coming in for its newly launched models. Tata Motor sales are likely to grow by as much as 39%, driven by the impressive performance performance of its newly launched Tata Nexon. Also, its commercial vehicles business is expected to do very well. Mahindra & Mahindra, another player which saw its sales getting impacted significantly. We saw 22% decline in their November month sales in the year of 2016 could gain with healthy demand coming in for its utility vehicles and tractors. Ashok Leyland could see a significant boost in sales led by strong demand in both the export business as well as the domestic markets. Hero MotoCorp sales could see a significant recovery with rural demand expected to be weaker as compared to the overall industry growth. Bajaj Auto could see its sales pick up in the domestic two-wheeler as well as three-wheeler space, with export market expected to grow by as much as 15% on a year-on-year basis. And lastly, we have TVS Motors. Analysts expect TVS Motors to clock in a 27% growth in volumes, led by strong performance by its newly launched vehicles as well as its scooter segment. Now, taking a look at what the brokerages have to say about the November auto sales, SBI Capital says that they expect rural recovery to sustain with healthy volumes coming in from Mahindra & Mahindra's utility vehicles and the tractor portfolio. Two-wheeler volumes growth, especially for Hero, are likely to disappoint, while Maruti Suzuki sales are expected to remain strong on the back of robust retail demand. Commercial vehicle volumes too are expected to revive, tracking the improving macro trends. Nomura also believes that growth is likely to be the strongest for the medium and heavy commercial vehicles, while the passenger vehicle segment is likely to report a 16% year-on-year growth in volumes.
But what are the other stocks that may be in focus on the back of news, where we have Shraddha Babla joining us to give us more on that? Good morning, Shraddha.
Morning, Agam. To start off with is HDFC, where the company, the board has given an approval for an offer for sale in HDFC Asset Management Company via an IPO. But even after the sale, they will continue to hold at least 50% in the AMC subsidiary versus the 57% stake that they hold right now. The QIP of Mahindra & Mahindra Financial Services opened yesterday. They're looking to raise a total of about 1,056 crores. The floor price, more importantly, has been set at 439.63. That's close, almost the closing price on BSE yesterday. Laurus Labs, which has said that they've received their maiden tentative approval from the US FDA. Now, this is for a drug which is used for HIV infection treatment. You have Reliance Communications, which has said that majority of the lenders have decided to oppose China Development Bank's insolvency plea, so some relief coming in there. Reliance Power, which has executed project agreements, then this is with respect to its 750 megawatt a plant and LNG terminal project in Bangladesh. We're also tracking a couple of bulk deals. First of all, McLeod Russell, of course, where the promoter Kamal Kishore Baheti sold about 9.1% stake yesterday, but it's Nomura, interestingly, which has bought about 7.7% stake. Zydus Wellness, where barring India, private equity has sold 1.3% stake, and Capacity Infra Projects, where Society Generale has bought 3.1% stake. So those are the exhaustive list of stocks that you need to watch.
Well, thanks for that, Shraddha. But we'll move on, and this time it's the leather industry, where India accounts for more than 10% of the global leather production, with factories all along the Gangetic Plain, starting from Kanpur in the north all the way down to Kolkata. While most of them have been around for centuries now, they are yet to make the transition to the formal economy. Bloomberg Quint's Purva Chitnis traveled to Kanpur only to find out that the leather industry has to deal with a whole host of factors that's hit them in fast succession.
Before cow vigilantes cracked down on slaughterhouses, tanneries were shut to curb pollution, the cash purge hurt demand, and the new nationwide tax mandated 36 filings a year, Mohammad Sharif's tannery in suburban Kanpur was thriving.
शुरुआत में और अब में बहुत फ़र्क है। पहले हर चीज़ थोड़ी सी आसानी से मिल जाया करती थी, अवेलेबिलिटी थी। अब जो है बहुत महंगा भी हो गया है।
किसकी अवेलेबिलिटी की बात?
रॉ मटेरियल की अवेलेबिलिटी, केमिकल की, और जो कंपटीशन था वो भी कम था। तो अब जो है थोड़ा कंपटीशन भी बढ़ गया है, और जो नॉर्म्स हैं सरकारी वो भी थोड़े हार्ड हो गए हैं, फॉर्मेलिटीज़ बहुत हो गई हैं।
Taking advantage of the situation, countries like Vietnam, Bangladesh and China have flooded the market with cheaper leather, making Indian exports uncompetitive.
Industry is in a difficult situation. It is a very difficult time for the industry. We are having a lot of competition from different countries. From last 3 years, we have a negative export growth.
Exports have gone down by about 15 to 20%. Now, we want more orders, but part of that business has already shifted to China, to Bangladesh, to Vietnam.
ग्रोथ न्यूज़ आता है, फैक्ट्री हटा दी जाएंगी, काम बंद कर दिया जाएगा, कहीं शिफ्टिंग कर दी जाएगी, तो लिहाजा इधर जो फॉरेनर जो ऑर्डर आता था यहाँ जाजमऊ में, तो फॉरेन पे डिपेंड है ऑर्डर पे, अब वो ऑर्डर मिलना बंद हो गया, लोग भी ऑर्डर देने में डर रहे हैं, इतना फैक्ट्री गवर्नमेंट बंद कर दे.
Since leather units sourced raw skins from abattoirs, it has hurt supply. Fear of beef vigilantes has hurt the cattle trade.
There has been a problem in India about the slaughtering of the cattle hides. Slaughtering was slowed down considerably. Less slaughtering means less raw hides. And if we need more raw hides than what they're slaughtering every day, that means that automatically their prices go up. It's about 10 to 15% higher.
Apart from the decrease in supply of raw materials, the industry has also been impacted by the double whammy of strict pollution control norms and GST.
There are about 25 small shoe shops here in the by lane of Kanpur. But the retailers here are not really happy because the implementation of GST has slowed down their business.
30 से 40 रुपए से 50 रुपए डिफरेंस आया हम लोग के पैर में. तो जीएसटी की वजह से थोड़ा लेदर शॉर्टेज कर रहा है, तो मार्केट में लोगों ने रेट बढ़ा दिए हैं, डबल टैक्स देना पड़ रहे हैं.
ये जब से नोटबंदी और जीएसटी लगी है, जब से जो है कारोबार बहुत चौपट हो गया. आज शाम को 7:30 बज रहा है, कस्टमर को कोई पता नहीं है.
GST is a good thing, but ultimately, if your money is not refunded, like we are all waiting for our money to be refunded. 6 months have gone down, almost 5 months have gone down now. And we are not seeing any refund coming to us. It's eating our working capital. If somebody needs blood, and if you don't give it on time, then by the time you bring it, and if he's dead, then it's of no use to him. So it is just like that. All the units, manufacturing units, they are facing a lot of hardship just because that our money is not being refunded on time.
The loss in income for the tannery owners has also trickled down to employees, many of whom have lost their jobs and are finding it impossible to make ends meet.
पगार क्या मिलता है, जो मिलता था उसका हाफ मिलता है, जितना काम करेंगे उतना मिलेगा. 8 रुपये का अंडा बिक रहा है, 60 रुपये के प्याज मिल रहा है, घर का किराया देना है, बच्चों को पढ़ाई लिखाई का पैसा देना है, आएगा कहाँ से? किसी तरह से आदमी जीवन जी रहा है, समझिए.
अगर ये मेक इन इंडिया में ये आया है चमड़े का काम, तो हम लोग का जो भी उसके बेनिफिट्स हैं हम लोग तक पहुँचने चाहिए, हम लोग तक नहीं पहुँच रहे हैं. मतलब कोई भी छूट या सपोर्ट हम लोग को नहीं है. जो भी है आप अपने से यू आर मतलब नाउ यू आर सेल्फ डिपेंड. आपको किसी का सहारा नहीं. हम लोग अपने बच्चों को ये काम नहीं करवाएंगे क्योंकि इस काम का कोई फ्यूचर नज़र नहीं आ रहा है.
Well, there is a lot to talk over the course of the day, and you will find all the live market action on Bloomberg Quint. There are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. The White House is weighing a plan to replace Secretary of State Rex Tillerson with CIA Director Mike Pompeo, and 3 administration officials said amid frustration with the top diplomat's slow pace of hiring and repeated clashes with President Donald Trump. And the Trump administration rebuked China for not being tough enough over North Korea's nuclear missile program and said that the Asian countries backs idling on market-oriented programs. With that, it's a wrap on this edition of Daybreak. All you need to know is up next. Stay tuned in a Bloomberg.